Cryptocurrencies are so shiny. They attract attention with their potential for enormous profits, yet many are turned off by a lack of understanding of how they even work. This doesn't surprise me at all, because you hear so much about crypto, but what does that even mean? Cryptocurrencies aren't physical. The entire mechanism operates somewhere online. You cannot hold a single coin in your hand, and you have to trust that the entire network won't disappear overnight. And this is, by the way, a very common argument people make against Bitcoin, but I'll explain it later. Everyone has an opinion about cryptocurrencies. It's just impossible to not see all those opinions. And I also think that very few people actually want to find out what all this crypto, Bitcoin, altcoins, DeFi, blockchain, etc. is all about in detail. And I'm not surprised, because the way it all works is just weird.
That's because Bitcoin is based on equally unusual designs. Yes, it's not the first attempt to create a digital currency. The first ideas for digital currencies are from 1980s. They partially shaped what the cryptocurrencies look like today. These ideas didn't take off, didn't make it, because no one could actually figure out how to create an independent and secure system at the same time.
You know that they can tell that you're pretty much reading this from just Wikipedia, right?
All right. Who f***ing cares, okay? Really.
It was Satoshi Nakamoto who in 2008 combined the features of these projects and created a system that, to the surprise of many, worked. And now, because of this, 13-year-old Jacob can spend his parents' money on meme coins. Good investment, Jacob. The blockchain, which enables all transactions, is simply a history of all transactions executed on a given network. As the name suggests, it's a chain of blocks that contain transactions made within a given time frame. Miners create these blocks. Their job is to collect recently announced transactions and package them into a single block. This block must then be confirmed by the rest of the network to join the chain. For this work, miners receive a reward in the form of cryptocurrency. Theoretically, anyone can mine. For example, Bitcoin. When you gather tens of thousands of enthusiasts with computers and then add exchanges with their machines, you create a network independent of any particular entity. But that's not all. Basically, anyone can also run a so-called node, a copy of all transactions and data from the blockchain. Nodes don't create new blocks, but they verify that transactions recorded on the network are correct. So you have a division of roles here. Miners collect transactions and create blocks from them, and nodes check that everything is correct. Each operates independently and pursues its own interests. This prevents anyone from taking control of the majority of the network and manipulating it. Usually, if you want to buy some coins, you go to an exchange and buy them. Nothing complicated. But regulated exchanges require identity verification, which some people don't like. And me personally, I'm not a fan of this type of solution, so I came up with my own solution. What I do is I basically tell people like, hey, can you give me all your passwords to all your accounts? And they usually don't agree with me, so I also have this big metal thing with me just in case. So you can also buy directly from someone who wants to sell their cryptocurrency. This is called peer-to-peer. Sellers advertise on social media groups, for example, where you can trade with them. Of course, there's a risk of being scammed because no one monitors it as closely as an exchange. However, sellers usually care about their reputation, so if you are careful, you'll be fine.
Want to be even more original? Or value your privacy? Or just you don't feel like creating an account anywhere? Well, we have a solution for you, but we have to leave this forest first.
But this time, we're not taking you to any field or some forest. Just yet. We are here for a reason, because you can buy crypto physically, IRL, whenever you want. Come with me.
Of course, I'm talking about the Bitcoin ATM, but before we get started, someone seems to be breaking into our building.
Before you start anything, you need a place to store your funny coins. you need a wallet, digital or physical one. When you just trade funds, you use an online so-called hot wallet. If you keep it long-term, you would want a physical one, the so-called cold wallet. It's best to have both if you have both savings and active funds. However, to withdraw funds from a Bitcoin ATM, you must have a hot wallet. Every wallet has public and private key. Public is an account number, like a bank account. The sender needs to know your public key to send you anything. The private key, on the other hand, is used to send cryptocurrencies from the wallet. You don't want to share it with anyone unless you want to be scammed. Just don't accidentally lose it, because if you don't have this key, you won't get your coins back no matter what. Don't be like James Howells.
The process is quite simple. You insert as much money as you can, scan the QR code, pick the coin, and wait. Fees are quite high, but you can withdraw money directly into your hand. Worth it for me?
There also must be a downside. Sending cryptocurrency isn't free. This applies to almost every crypto because of what I mentioned earlier about how the blockchain works. Miners have to get something out of it. Among other things, by sending cryptocurrencies, you contribute to their payout. But it's not that bad because fees vary for each coin depending on the technology used in its blockchain. Sometimes you can even transfer coins almost free of charge, even though Bitcoin has some of the highest fees. However, it all depends on the network load. So during quieter times, you'll pay pennies. For example, transferring Bitcoin from an exchange to another wallet on the weekend will cost you $3, but during the week, with heavier load, it can cost up to $50. Cryptocurrencies could have countless applications beyond speculations, which would make life easier for everyone. For example, transferring coins can take a few seconds to several minutes. In bank transfers, a day, several days, there's no comparison. Or smart contracts, which execute a given contract automatically once you meet the conditions without any intermediary. This could be used to arrange insurance, bookmaking, loans, or even real estate sales, all without intermediaries. Because crypto is still a new technology and it will take a long time for the world to adapt it, if at all. All these things are feasible and improve many systems, but public trust and lack of familiarity with blockchain will continue to hinder progress for a long time. Plus, government itself doesn't like it really when they have no control over what you do with your money. Keep that in mind too. But for example, in countries where the national currency is worthless, such as Argentina or Venezuela, cryptocurrencies that mimic the price of a currency, such as USDT or simply Bitcoin, are a good alternative. Even despite some fluctuations, many people still resort to cryptocurrencies to protect their assets. Despite all this, people only care about, just profit. I probably don't need to explain to anyone why cryptocurrencies are our favorite asset of risk-loving speculators. Altcoins can offer enormous profits with equally significant risk. Bitcoin, the most stable of all, apart from stablecoins, acts as a kind of gold among altcoins. It's not always profitable to buy due to the time and transaction costs, but it is and will be the most popular cryptocurrency due to the rapidly growing value in a short time, relatively high stability compared to other coins. That's pretty much it.